Hey, what's up, guys? Welcome to the Truth About Real Estate podcast. And today on this episode, we're talking real estate syndication, asset management, and data driven investing with founder and general partner at Smart Asset Capital, Brock Mogensen. How's it going, Brock? Thanks for being on the show today.
Doing well. Yeah. Thanks for having me on, Matthew.
Cool. So yeah, right before this, we're just getting started. You're in Milwaukee right now, Wisconsin, and you've been doing real estate for a couple of years now. And we wanted to find out more about you, how you got started. You mentioned getting started in multifamilies, getting to a real estate syndication, and we want to learn more about the process and how do you do that.
Yeah. So it's been awesome. I mean, I've been in this. It's kind of switched over. Started with a duplex, and after that, the next deal was a syndicated 89 unit deal, apartment building, and that space just kind of caught my eye, and I could see the opportunities to build a business around it more so. And really, that's what kind of brought me into it, the idea of going after bigger deals and leveraging partnerships to get there. So that was the route I took with it.
Most people, when they start in real estate, they usually start like, hey, I'm going to start buying myself single family homes, maybe some multi-units, some condos, maybe some fix and flips. How do you go into real estate? You mentioned a couple years ago now, about 3. How do you go in, buy a multifamily, and then suddenly jump into syndication? Like, how do you bypass these steps, and like, what got you to do that?
Really, for me, it was just the right partnership. After I bought the duplex, I spent some time. There's a million different ways you can go in real estate, right? I mean, you can go wholesale, flip, single families. There's a lot of different ways to go, and I spent some time exploring each avenue, and really was just seeing, there's benefits to all of them. But for me, I landed on this idea of going after bigger deals, and syndication was the way to do it for me, right? I didn't have all the money to go buy them myself, so that was kind of the way I did it. And I said, well, let me figure out a way. Obviously, I don't have any of the qualifications to go syndicate a deal on my own. I need partners. So I figured, let me hone in on a skill specific. There's a lot that goes into syndicating a deal. For me, it was, let me figure out, one piece of the puzzle that goes into syndication, spend a lot of time and learn about it and become, somewhat of an expert in that specific niche of it. And then go out and find partners that maybe lack that piece or are looking for someone to partner with in that arena. And for me, it was the analysis of deals, the more the analytical side of stuff that goes into it. So that's where I spent 6 months or so, just doing everything I can, just learning. Went out, networking, found the right person that was, had some experience, looking to kind of get into more syndication stuff. And we created our partnership, which turned into Smart Asset Capital. And now we've gone on to do, 6 or 7 of syndicated deals.
Nice. Let's talk about that because there's a lot to unpack right there. So, like, first step, yeah, like what made you decide to get in real estate, and what made you decide to buy a multi-unit, and where did you end up buying that multi-unit?
Yeah, so the first deal, so really goes back to, I grew up, my dad owned 2 duplexes.
Okay.
And I came from a very blue collar job. And I just saw like what that could do to, enhance your life, right? The cash flow of just owning simply 4 units, what that could do. So it was kind of my first year out of college. I was like, well, let me just start. I'm just going to buy a duplex, save up some money, buy a duplex. And that was the first step. Never really thought much of it. Never thought it'd be what my career path I would take. It was more so, this seems like the right thing to do. And then as soon as I bought it, in the first month or 2, I did the house hack model, and I'm living in it, and living for free, and I'm cash flowing. So I'm making a couple $100 a month and living for free. I'm just like, okay, this is crazy. Now how can I, 10x this and make it, much bigger than just a duplex. And that was kind of the path that ended up leading to where I am today.
Nice. That's a smart move. You buy a multifamily, you figure out how to house hack it, and you get partial rented. And it's covering, like you said, it's covering your mortgage, and you're getting some profit from that. Especially in the beginning too. That's a good thing to do. And like, who taught you how to, and did you partner with someone? And then who taught you how to buy the multi-unit, how to figure out the numbers, house hack it, and start profiting?
Yeah, really, what the first one I did, to be honest, I really didn't have much knowledge at all. I mean, I listened to maybe, some, handful of podcasts, read a book or 2, and that was kind of just kicking it off. I mean, but it's real. I always tell people too, like, house hacking a duplex, you still have to you have to cover the bases and understand, how much money's coming in, what's going out, what's your mortgage, the simple things like that, location. But it's fairly easy to do. I mean, you get an FHA loan, 3.5% down. as long as, you leave a little buffer there for, a furnace breaking or something, it's pretty simple to do. I always tell people if they're looking to get into it and start smaller, I mean, that's the best way to do it, because you can get into these deals that are relatively simple, and kind of protect a lot of the downside through, putting 3.5% down. So it's if you go into that first one, my knowledge is pretty basic. I started with listening to Bigger Pockets podcasts and had a general idea of what, how to analyze a deal, but nowhere near, the sophistication it would take to have gone after a larger deal at that point.
Nice. Yeah, that's a smart move. I think a lot of people, definitely start out with one property first, and before they start jumping into syndication, they're figuring things out in real estate, like trying to learn and have boots on the ground locally. And doing a house hack is a good example, because you're learning about, buying, dealing with mortgage, dealing with insurance, dealing with tenants, dealing with management, trying to make cash flow on the property and build up equity at the same time. Were you adding value to the property as well, like doing remodeling, anything while you're living there, or you just bought it and lived?
Yeah. I rehabbed the whole thing pretty much, which was great. Being involved with, being pretty involved with that first one, doing a lot of the work on my own, and kind of getting an idea of what goes into rehab and how almost always it's going to come up higher than you originally project in price. Just a lot of learning lessons there. I mean, learned a ton for sure there, and that's what allowed me to kind of have a base of knowledge to go from there. But yeah, the rehab in that one was a lot of work, and it ended up being a great deal.
What'd you do, and like what did you learn from it?
It was pretty much gutted the whole thing. Yeah, like pretty much flooring, the whole 9 yards essentially. And yeah, did the lower unit while I was living in it, and then moved up to the upper unit, did that one. So ended up being quite a bit, but it was a good learning lesson, and kind of did it over a period of time where I was able to spread out the costs a little bit, and overall just great experience and great profit.
What was the experience you learned from it? Like any mistakes you learned from it? Any problems you run into?
Trying to think back if there was any. Maybe just like some of the stuff dealing with contractors and all that, just longer timelines than they originally are gonna, especially now. So I mean, that's even crazier now. But always putting a buffer in there if they say it's gonna be done next week. Maybe you plan the next person to come in to do the next step. Maybe leave a buffer in between there, because stuff always goes wrong with contractors and delays happen or materials don't come in on time. So leaving a little bit more of a buffer, like stuff like that. Some of those lessons there were pretty big.
Yeah, I think that still applies even today, even more so. And I feel like, contractors, they do a lot and it's great, but at the same time, I don't see it directly as, like kind of like corporate America, like you're fully structured project management, deadlines and everything. It's just kind of like, we're here, we'll get it done. We think it'll take this long, but it might take a lot longer. We don't know for certain. And there's always delays by multiple parties, and it's hard to predict. But as an owner and investor, you're like, this sucks, because, there's no control, right? You don't know the exact timeline. You think we know how estimates, some people, investors might know exactly how long it takes, but everyone has multiple jobs going on at the same time. There's material supply issues, supply chain issues, there's cost, right? And workers that are hard to get a hold of and make the project run on time. And are they running a full crew at your house, or are they spreading the full crew across multiple properties? Then it gets harder, right, to deal with. And but the good thing about it is, like, as an investor, you're learning a lot from it. You're seeing timelines, you're understanding cost, materials, what goes into it, and kind of expectations, and you're hopefully building a good team at the same time with that. It's not easy to find a really good team and someone you can trust and know that it's going to be done when they kind of estimate it's going to be done, right?
Yep, absolutely.
And then if you do it yourself, even more fun and hard too, because it is hard labor. Yeah, you know what I mean? Like,
oh yeah,
you do. Okay, so you got down
knocking out walls and demolition. I mean, yeah, it's good to learn all this stuff, but it makes you appreciate the being able to hire a lot of that stuff out.
It does. And I actually done a lot of remodeling myself too, like remodeling bathroom, kitchens, electrical, Cat 6 lines throughout the whole house. And once you start doing all that work yourself, you're like, wow, this is hard labor. And this is, you know exactly what goes in, you know how much time it takes, you know the kind of cost. You're like, damn, I don't want to do this every day. It's not fun. It's not the exact thing I want to do. It looks great on TV, but in person, they're like covered in, drywall and dust and cement, right?
They just show the fun parts on TV.
Yeah, exactly. They don't show you the intensive hours it goes through that.
Yep.
Exactly. I'm just laughing about it because we've done that a lot. So next thing is too, after buying a multifamily, how do you get your mindset and just jump into syndication? Like, how did you start really pouring into it, start learning about it? You said you started focusing on like learning exactly what you needed and then partnered up with people. How did you do that?
Yeah, it was just a lot of the education process. I mean, you just really have to figure out. I think people, especially if they're looking to get into, some of these like larger deals or syndication specifically, where there's more that goes into it. Trying to learn it all at once really isn't the best way to do it, in my experience. There's just so many pieces: capital raising, and then analyzing deals, underwriting. There's asset management. There's broker relations. There's a whole bunch of different things that go into it. Instead of trying to, and eventually, further I'm getting into this, I'm involved in the whole puzzle. But in the beginning, just really everyone has a superpower or really good at one specific thing, and most likely it applies to a piece in the puzzle. So it's really just figure out what it is and just double down on it and become very good at it and attractive at it, and then network and find the right partners. Because if you go to enough networking events, you're going to find someone else that has the opposite skill set of you and has the same vision as you, and you get along well. I mean, partnerships aren't easy to come by, but if you get out there enough, you're going to meet the right person, and that can catapult your business pretty quickly.
Nice. And did you partner with like a senior investor or senior syndicator?
Yeah, I ended up partnering with two people. One of them, neither of them had done any syndications, but he has his own property management company and had a couple hundred units already on his own. So it was very good being able to partner with someone like that, especially when it comes time to get the loan on a property. Mm-hmm. I'm walking into the bank with a duplex and, maybe $50,000 net worth. That's not going to do much on a multi-million-dollar apartment building. You need someone with a strong net worth, strong liquidity, all those boxes. So partnering with someone like that too. I mean, a lot of times you partner with someone just like that and they don't even do anything, and they're just, put their name on the loan. So there's a lot of things that go into it. That's why it's really tough to do without partnerships. It's possible. You see people that do it, but for me, it was just a quicker way to get there by partnering with others, and it's worked well.
Nice. That really makes sense. And it takes a lot of work and, encouragement and a little fear too, because for example, to go from being an individual investor to being on a team with right partners together, it takes a lot of work and a lot of trust. And with that in mind too, like finding the right partners is it's kind of like marriage. It's not easy. It's all, a lot of compromise, a lot of compassion, a lot of constant communication, clear communication too, because this is regarding investments, people's money. So you really need to be clear with your partners on understanding each other and what your goals are together, and that we're aligned together to make sure we're helping our investors do the best they can, right?
Yep.
That's not easy to find good partners. How did you find good partners? Like, how do you vet them, and how do you know they're good partners? What made it click for you?
Yeah. First off, it was just, I met him through networking, a Bigger Pocket specifically. Actually, that was kind of a chain of events through that. But, and then it was really just first off having the same vision. We had the same idea of, we'd meet multiple times and talk about what our idea was for where we wanted to get our portfolios to. And that's the first piece. You can't partner with someone if they're thinking, well, I want to go this route in multifamily, or, I'd rather do, commercial this way. You really first have to have the vision so you can connect on that. Otherwise, it's just going to be doomed from the beginning. And then as well, just make sure your values align and stuff like that. I mean, you can't, it's hard to check all the boxes in the beginning in a partnership, because you're going to learn more about it as you start working together. And you don't want to sit there for a year trying to vet someone before you partner. It's kind of, you got to use a lot of your own intuition, but I think the biggest thing is just making sure your visions align, and then, you have the same sort of work ethics.
Yeah, I think that makes sense. It's really hard to find. And once you find someone really good that you can trust, then you guys can just keep building like crazy, because if you have the same vision, the same kind of mindset, then you'll get to where you want to be, because you guys are going to push each other to be there, right?
Yep.
But yeah, if one person's off and says, hey, I want to go a totally different route, and it doesn't even make sense to you because that's not your vision, that's their vision, then it'll be really hard, because you can't compromise in between the lines, right? It gets tough.
Yep.
So then you
Absolutely.
have to understand, hey, I need to find the right partner. There's so many people out there. There's great people out there, and there's some bad people out there. But really finding the key person that you can build a team with. That's why they call it like for example, they call it like a core forward as one way for just investing. But when you get into syndication now, you're adding more people to that core four on top of it, GPs, right, general partners, and to find really good key partners and key people too, especially funding and qualifying. Then it gets even tougher too because they have to have your vision as well.
Yep. Absolutely.
And then, yeah, I'm glad you found that because it takes time. And once you find the right people, then you can start moving, right? So now you found the right people. What's the next step? You guys had the vision. You guys found the people. How did you start building the syndication?
Yeah, it was really just a chain of events of us finding this deal that made sense. And we were like, oh, we all kind of, we could partner up on this deal together. This person brings this person brings that. And it was more so just kind of, we got this deal under contract, started working together. Like, oh, it's kind of working well. Let's just, what about how we just kind of start a company together? And that was kind of how it was born. And then we did that one. And then a few months later, did another one. And then a few months later, another one. And then it just kind of, we realized over a year or so that we work well together and we figured out kind of our niches. And it's, yeah, it's been a great way to go.
Nice. And when you do your first deal, did you guys JV the deal, or you guys actually say, "Hey, let's form a syndication really quickly. We're already in contract. We need to put this under the right corporation, the right setup structure, legal structure, and then start raising money on the first deal"? Or you guys just did the deal together?
That was our first deal was syndicated.
Okay.
And yeah, it was really, that was our idea. I mean, as we put it under contract, we knew like we were already in communication. Like it was kind of like, we're going to syndicate this. We didn't really want to bring all that equity, ourselves, or probably couldn't even, pull together that much, to be honest. But, so yeah, right off the bat, it was, this is what it's going to be. And this is the process we have to follow.
Nice. That's good. It's not easy to, first find a deal, put it under contract, and then, at the same time you're doing that, you're also building the legal structure, working with syndication lawyers, setting everything up, and then raising funds at the same time, right? That's like multiple jobs in one,
Oh yeah. Yeah. The whole process. I mean, the first time you do it, you can kind of read the books and follow and say, okay, you got to do this. But each time you go through, you kind of learn something. Like I learned, small things like the day you get a property under contract, engage the bank, engage, the attorney to get the paperwork started. Don't wait a few weeks and kind of, because all that stuff takes a long time and there are always delays and this takes an extra day or two. So stuff like that, you wouldn't really know from just reading books and all that stuff. It's more so you just kind of got to do it and learn and make notes of it and do it different the next time.
Yeah, I noticed that too. Like no one tells you, hey, when you're getting your first property, you need to do 10 different jobs at the exact same time. There's no waiting. There's no like this goes first and this goes first. They all go first.
Yeah,
And that's a problem because like, wait, no one told me that they all go first. And
exactly.
which one goes first? First. I'm like, well, they all go first. So
Just do it
I
the
don't have
first
enough
day.
time.
Yeah.
You need a team. Like if you're raising money, how are you getting the financing set up? How are you doing due diligence? How are you doing this and that? How are you marketing, right? But as one person, that's why syndication, you need a team. You have to find the team. You have to learn. You have to have mentors. You have to build up the experience and the right key people to make it work, right?
Oh yeah, it's exactly right. It's so hard to do on your own. And yeah, it's what I've learned is it's really, you get a deal under contract and it's like those first couple weeks, like, okay, there's a tsunami of work that's coming, and it's just like, okay, you're hitting the due diligence stuff, you're doing this. And it seems the kind of, you're always raising capital throughout the time. And then it's after, a few weeks or a month, slows down a little bit after you start getting investor commitments. And then a couple weeks before closing, especially the week of closing, it just ramps right back up. So it's kind of a roller coaster as far as how much work goes into these deals. But it's fun. It's a lot of fun to be engaged.
I think it's a lot of fun too, because when you have real estate sales, you buy your own property, you flip, you invest, is completely different because now you're saying, hey, I'm actually an asset manager. I'm actually raising capital. I'm actually using that capital to deploy it, to buy assets. And then I'm, making hopefully good investments for people and then returning those investments. So it's completely different than I just helped you buy property and sold it. And then whatever, I walk away, right? It's so different. Even if I made you money, it's not the same kind of feeling as I am actually your asset manager into building true generational wealth, true tax diversifications, hopefully wealth preservations versus I just bought and sold your property or I bought my own, right? So different feeling.
Oh yeah. And I think that's a lot of, I feel like a lot of the education stuff that's out there. I think a lot of it's getting better now, but all of it really talks about is finding the deal, raising the money for the deal, financing the deal. You rarely see content out there that talks about asset management.
Mm-hmm.
And I think a lot of people get the misconception, especially in the syndication and these bigger deal spaces. Oh, all I have to do is get it across the finish line, buy it, flip it over to the property manager, check in with them maybe once a month, and then 5-6 years from now we'll sell it, double our money as investors, and this is easy.
Yeah.
But realistically, asset management is probably it's double the amount of work than everything else. I mean, you got to be on top of it daily, weekly. Weekly calls with property managers, tracking everything, making sure the business plan is implemented, reporting to investors. There's just so much that goes into asset management that I think a lot of people don't necessarily know, before they get into their first deal, but it's super key.
I agree. I think people highlight, hey, I'm raising money, I'm building a syndication, I'm doing all this stuff. They don't go into the exact details that you just mentioned. Here's all the things you need to do with that. Here's all your responsibilities and compliances, SECs, and all these rules that you need to follow. If not, you can be in trouble for you and your investors. So really, it's a lot more work to it than the glamorous parts of it. I think a lot of people focus on the key glamour, like, hey, we just raised $1 billion at a fund, whatever it is, right? Sounds great, but it's a lot of work behind it if you're actually doing really well for investor groups.
Oh yeah. Because without the asset management, I mean, the returns aren't there. You can't just rely on even the best property management company out there isn't gonna, get into every single details, and they're gonna miss stuff. So you have to be on top of them, and you have to make sure, you're hitting your pro forma, because if you just flip it off to them, 99.99% chance you're not gonna hit your pro forma.
So you're telling me even though I hand it off to a property manager, they're not going to do the due diligence, make sure everything's perfect, and run all the financial auditing, make sure everything's good, and make sure they're saving you money? You're telling me that's what happens?
They'll make sure the day-to-day stuff they'll collect the rent, they'll fix the stuff, they'll deal with the tenants, which is huge. I mean, that's a lot of work. But beyond that, it's, they're not tracking all these specific details that you need to be tracking in order to hit your returns.
Exactly. So yeah, as an asset manager, the job for asset manager is really to, help make sure your core four people are really there taking care of the property. Also to analyze what's going on, to make sure what they're doing is they say they're doing, and to make sure the numbers look kind of good, right? And make sure that there's no, errors, omissions, or actually even fraud, and make sure that, people are paying on time. What's the vacancy? What's the remodeling cost, maintenance cost? And are they just elevating costs naturally on purpose? What are they doing? So kind of auditing that too, and really keeping a good eye on it, whether it's 4 units or hundreds of units. You got to make sure everything looks pretty solid, right?
Absolutely. Totally agree.
Yeah. And I've seen some people too. Sometimes there's good property managers and sometimes there's some not so good ones. For example, some of them I see that, hey, we're going to turn the units as quickly as we can. We get leasing fees on all those units, but it doesn't matter to us because we're just a property manager, right? But like, they're not keeping retention up. Another ones will start upcharging you on all these things. I need to maintain this, come back 10 different times, and charge you a lot of money every single time I come back.
Mm-hmm.
So those can add up, right?
Oh yeah, it's tough to find a good property management, and when you do, you just gotta treat them well and make sure to hang on to them.
Exactly. Good property managers, good contractors, good handyman workers, and then people who kind of watch how they understand. The really good property managers are the one who understands that, hey, we're building something together. We're going to keep building up the assets, right? And then the more you can maintain it, think of it as not just property management. Think of it as a way to build capital, build wealth for everyone, and everyone wins together. Then it becomes a lot better, right?
Absolutely.
So now you guys got your first syndication, you started going, you get everything up and running. Is there any, what's the hurdles that you guys had to go through to make that happen?
I'd say just learn, a lot of the processes, learning the processes, definitely some learning lessons on the first deal. And, just taking those lessons and, applying them to changes and what we should do different on the next one. I mean, I think in this business, you're always going to be learning no matter how long you're doing it. There's always going to be something that changes, and figuring and pivoting and learning how to do it. So, I mean, yeah, it was a lot of the stuff we just kind of, we had a solid education going into it, but it was, kind of learning and applying our changes and being able to pivot quickly, has been the key for sure.
I think one of the challenges I see too is that even though you're learning, you're doing all these things, you get a property under contract. One of the hard parts I see is the raising money. Raising money can be, especially your first one, is the most toughest
Yep.
because now you're really utilizing relationships, you're utilizing trust, you're showing your experience, you're discussing what your vision is, and hopefully people adopt that. The second part I see the challenge is after you do that, really having them sign the subscription agreement and really funding it, because people say they want to do it, and then when it comes to the deadline, they're like, I'm not so sure yet, right? So there's a percentage that will not go through.
I'd say it's about 50%.
Okay.
And then definitely that was one of the
Yeah.
learning lessons is, before we did the first one, I was talking to people, and you get on calls with people or reach out to your network. And it's real easy when you're having coffee with someone and you give the whole pitch. This is what I'm trying to do. These be our target returns. It's really easy for someone to say, yeah, I'd be under 50 grand if you could find a deal like that.
Mm-hmm.
And then 4 or 5 months later, you hit them up and, hey, I found that deal. Here it is. Exactly what I was going to say it is, and all of a sudden, yeah, let me think about it. You follow up, and a lot of times they'll say they're in. Then it comes time to wire. Oh no, this you'd be amazed by the excuses you hear of why they can't wire the money. And that's you just got to account for that. I mean, if you think you have $1 million committed, expect to actually bring in 500 grand. That's kind of my rule of thumb now is, you got to account for overage there, because a lot of times people say they're in and stuff comes up realistically, or they just kind of get cold feet and back out.
Yeah, I completely agree. I think 50% is a really good number. And the reason I see too is that, people have things going on. We don't know what their life is, what's going on, what their money, financial situations are. But I think the way we can see it is that, hey, we're here providing a lot of value, a lot of education. And then when the people are ready, they'll come and join in. And until that time they're ready, you just keep, loving on them, providing them value, showing what's going on, trying to say, hey, our vision is really to help you invest, really to diversify your portfolio, really to find ways to preserve your wealth and build generational wealth. And within that, when you're ready, come on board and join us. But in the meantime, we're just going to keep growing, keep sharing our knowledge to everyone out there. And hopefully the more people hear it, one is building an audience to hear it, like, podcasting, like joining our podcast, joining other people's podcasts and talking about what's going on. I think the more people hear it in life, the better it becomes, because remember in like high school, college, it's not really about financial literacy, right? It's education in general, but really I wish they talked about real estate, investing, assets, financials, building that model up. But now people like you and us are doing that. We're educating, and some people have different fear, conservative levels, and we understand that. But the more you just keep sharing with them, the more people become receptive. Okay, actually, this makes sense. I'm tired of working the 9 to 5. I'm tired of just sitting here. I'm not building, right?
Yep.
You can go actively invest yourself. Great. It makes money. It's a lot of work. You can do it. Passively also makes a lot of money. You can do it, and it can become easier. But either way, you have to learn either way.
No, yeah, you're totally right. And going back to, you brought up a good point with raising money. I mean, that was definitely the first deal. Luckily I had the partnership that I was explaining, but the first deal myself trying to raise money, it was, I had a duplex and I had a year's worth of education in real estate, trying to raise money from people to give over their hard-earned money. I mean, it was tough. I was able to help a little bit with the raise, but the more, and I know you hear there's a lot, like the what they call it, like the law of the first deal.
Mm-hmm.
I mean, it's so true. I mean, I remember just, you hear it on podcasts, like, oh, it kind of sounds like bullshit, but then it actually happens, and it's like, okay, you do your first one, and now all of a sudden you have a track record to say, hey, we bought this deal, we're 3 months in, we've achieved this, and this. You're able to kind of leverage that, and you do the second one, and it builds from there. I mean, those first couple of deals raising capital, and it was tough because we didn't really, as a team, we didn't really have a track record. Obviously the partnership helps to be able to leverage. You can kind of leverage your partner's experience quite a bit, but now we raise capital. I mean, I'm not going to say it's easy to do, because I don't think it, if anyone tells you it's easy, it's not. I mean, maybe for the top elite, but it's, now it's, we oversubscribe pretty quickly, and there's no better words to tell, someone that was being slow on wiring money, hey, well, too late, into the next one, because then that just creates even more demand. But it's, yeah, definitely. It's definitely tough. I mean, if you're lucky enough to come in with a really strong network, it might be easier. But for me, it was kind of starting with not much of a network and just having to kind of build it up.
How did you build up the network?
I would say, just a lot of networking. The biggest thing for me was starting a meetup. Okay. We started a meetup that focused specifically on multifamily here in Wisconsin, have grown it to, and I say this specifically because the largest multifamily meetup in Wisconsin.
Nice.
Specifically multifamily, not the largest, real estate meetup. Because a lot of the other, and what kind of take that step back, I was going to all these meetups, and I bet a lot of people in other markets can relate. Bigger markets, probably have more options to choose from. But for me, I was going when I was first starting. I mean, I was hitting 3 days a week, finding every meetup I could within an hour and just going to them.
Wow.
And it was every single, I'm not even exaggerating, every single one I'd go to, I probably went to, there was like 5 or 6 of them within an hour of me. And all 6 of them were about flipping houses or wholesaling.
Yep.
I never found one. I'd go to these and say, hey, my goal is, at that point, I was like, okay, trying to buy a 16 unit or whatever. And people were just like, okay, well, that's cool. I'm working on flipping this house, and it was all, which is good knowledge too. I mean, because it all helps. But we were like, and finally, when I met my first partner, we're like, well, let's just like start our own, and we'll specifically, talk about multifamily apartments. And we started it kind of with no plan, just create a Facebook page, and found a space to do it, and then kept on doing it. I mean, we've been doing it for, I think, about 2 years now, and it's been awesome. I mean, we've met so many connections, deals, investors. It's been huge.
You see the power of networking and events. Like, for example, I think of myself and my team as more of like a marketing agency, right? If you start thinking about marketing and events coordination and put those two together, and you're a marketing firm, you can actually build really quickly, easier, because cold calling is hard. Calling people asking for the money without even seeing them and say, yeah, give me 100K or whatever, that's not easy to do. You really have to have trust and relationship. But if I meet you and I hear what you're saying and how your vision is, and I believe in it and I like it, and I'm actually actively looking for multifamily deals anyways, and your numbers make more sense than mine, for example, if I'm doing local small versus a local big one, then I might more be inclined to say, hey, actually, I want to learn more about that, right? Because now I know you, I've seen you, I hear you, I see people talking to you, and they're wanting to be in there. I want to be a part of that too, right?
No, I love that approach of taking it from, not even, I like how you said, I'm building a marketing company, even though it's all real estate, because that's nowadays. I mean, if you have good marketing with sales on top of that, I mean, you're just going to kill it in pretty much any business. So I love that approach. Right? I said, I'm building, a marketing company, and then, we take that and we turn it into real estate, because it's something I'm definitely trying to do more of. It's tough, right? I mean, staying committed to putting out content and making the content look nice. And it's a lot that goes into it. But I think, especially in today's day and age where you're fighting for people's attention, you have 10 seconds to capture their attention. But it's just super key. So I definitely like that.
Good. I learned a lot of that from, like, Gary Vaynerchuk, how he talks about, hey, for example, everyone, even individual people are marketing their brand, and they really need to think about it as a brand, create your audience, create your influence, create value, and just share with everyone you can. Because if you share with 10 people, that's your audience, that's not going to help you really much. But if you can create that audience to, hundreds of thousands of people, you have a percentage that will actually like you, want to work with you, and do deals with you. And especially when you start showing the content, the value, the sales history, more and more people will say, yes, I'm into that. But versus if you just, secret agent or secret investor, no one knows, then it's really hard to say, hey, I want to invest with you. No one, I can't even find you on Facebook, for example. Then, why would I trust you to give you my money, right?
Exactly. It's a great, I'm sure a lot of listeners listen to Grant Cardone, but his big thing is money follows attention. I mean, it's the 3 simplest words, but it's so true. The more attention you can create, I mean, the more money's going to follow.
That's very true. And yet not all agents, not all investors actually do that, though. They're like, well, they don't, because they're not marketing experts, for example, but anyone can learn to do it, right? They can learn to make videos. They can learn to write content. They can learn to tell the story, but it's hard. It's not the same, because pick up the phone, calling someone might be easier, but telling the story of why and how and when is totally different.
It's definitely a huge shift. I've been trying to do it for the past handful of months. I've been doing more on Instagram, like social media, trying to, build up a network, and it's tough. I mean, I consider myself a pretty introverted person, and to grab your phone and take a selfie video and, post it, or, caption, just stuff like that, where you have to get out of your shell. I mean, you can do it without it. I mean, it's definitely, you see people all the time that are huge that don't have any social media or stuff like that, but it's just, today, I mean, if you can create a network, it's just so valuable, and you have to be willing to put yourself out there to do that.
Exactly. And I tell a lot of our people about that all the time. Like, you really need to put yourself out there. Get rid of the fear, get rid of the judgment, negativity. Don't bother. Just post, keep posting. It's all for
Yep.
yourself. No one watches.
Mhm.
It doesn't even matter. Just keep posting, right?
Yep.
The time will come when it's ready. And I really see value in that. And the reason I talk about that even is following data. The data is this: you built the platform, you built the audience, you build content, you create value. If you get one like, one thing is, for example, who cares about likes, right? But the point of it is this: did anyone see your content? Is it valuable? Did the person even make a comment? If one person makes a comment back, that's valuable. To one person,
Yep.
to 100 people, it's valuable. You really got to get the audience to get a bigger audience and keep providing the value. If people keep coming back, that means you really have something good to talk about and people want to hear you. And when you start building the audience, you start building the capital with it, right? In mind, people will come work with you. That's a challenge.
100% agree. Yeah, it's easier said than done for sure, but you're exactly right. I mean, you can't just expect to post, one photo and be like, okay, well, there we go. I did my job. Let's see the investors come in. It's day to day, staying on top of it, whatever platform you're using. It's just, and by no means am I any expert in any of this, but it's just watching others do it and learning and experiencing, trying to get after it. It's just, I mean, it's a lot of work.
It is. And I talk about this too. Like, hey, for example, fashion girls, guys, like when they have a huge following, they worked their butt off to get there. They don't, even
Yep.
if they look it or not, they worked really hard to get there. They had to provide a lot of content to make that happen. One
Yep.
photo doesn't, and wearing whatever you wear, it doesn't matter. When you start can get a following consistently, they worked our butt off to get there, right?
Oh yeah.
And that provides a lot of value. They talk about even how much residuals they get, passive incomes from those social media channels, on top of what they're doing for sponsorships, on top of what they're doing for courses, education, and they're really working hard. So you can't say, hey, they look good, they got it. Nope, they worked their butt to get it. All right, and we need to learn that too, to do that.
Oh yeah, it's crazy the value that's in social media or whatever communities and any sort of network you build. I mean, companies are literally, you look at like private equity companies right now that are selling. I mean, literally in their valuation. How many Instagram followers do you have? You have 1 million Instagram followers. I mean, I don't know what a valuation increase is going to get your equity multiple, but it's on there. I mean, it's huge.
Yeah, because basically it's based on influence and data now, because
Yep.
it's really analytically driven. So talking about data, how does that work with real estate syndication?
A lot of mostly in the asset management stuff. I mean, I think obviously there's a lot of the data stuff that goes into tracking trends, population, job growth, all that stuff on the analysis side.
Mhm.
But I think within the asset, that's kind of where on the asset management side, tracking data, I think is something a lot of people don't do. They just might look at their basic income report and rent roll and kind of just judge performance off that. But diving into the details with asset management has been huge and allows you to pivot into certain things. Just tracking. Over the past few years, I've built different. I'm always deciding, okay, I'm gonna start tracking this now. Start tracking this, or I might hear someone else talk about it, and I might add that into my weekly tracker, and just a whole bunch of different things. Stuff like tracking how much leads are coming in by source. We learned that Facebook Marketplace is our biggest lead generator. So we doubled down on Facebook Marketplace, spent more time, hired a virtual assistant that fields messages within 10 minutes. So we can, capture all these leads and develop a system for those leads to get shot over to our on-site, lease manager, leasing agent that's going to, set up a scheduled appointment with them, just stuff like that, where the data allows you to build systems around it. That's what a big thing about it is. You don't want to just start building systems aimlessly if they're not worth it, because it takes time and money to set up systems. So track the data first, decide, what trends validate me creating a systems around this trend, and then go from there, build that system. Now, it can be off your plate completely, or maybe, take a lot less of your time and operate more efficiently.
Nice. So let's talk about data. What kind of data do you guys track for the properties?
Yeah, so I've there's quite a bit. I've built a spreadsheet that I kind of team it up on my website, but I really just am always adding stuff to that. I mean, there's basic stuff like, obviously you got vacancy and income expenses, expense ratio, stuff like that. We're tracking how much money is it costing to flip a unit. So that way I can compare it year over year. Are we trending downwards in our cost to flip units? How many days is it taking to flip units? How many days after it gets, after we flip the unit, or after we rehab the unit, is it getting leased? What's the conversion timeline there? And over time, you take all this data and then analyze it. You're not just going to have the data on day one, but you have to track it. Sometimes you can go back in systems and be able to pull it, but a lot of times you have to track it on a weekly, daily basis. So stuff like that. I talked about like the leads, delinquency trends around properties, just lots of different things like that. I'm always kind of adding and tweaking what I'm tracking on a weekly basis. And it's super, super simple to do. Any good property manager is going to have a good property management software, like AppFolio is one we use, and all that data is within there. It's just the way it is, tracked and trend within that system might not be how you want to look at it. So you might have to cobble the other data within there, or maybe you have to pull things off of other websites and put it into a centralized dashboard view, whether that just be a simple spreadsheet or actually creating your own, dashboard through Power BI or something, a good look at it. So you can look at that on a, weekly basis. We have several reports that go out each week. So we're always looking at it every day. I'm looking at the data. I'm not, there's rarely a day or two that goes by that I'm not looking at the data to make decisions on. So that way, when you get a call from your property manager, say, hey, this came up, what should we do? I already have that data in my mind where I can say, okay, I know, collections are at X, and, so far this month our expenses are here. So no, let's hold off on that, wait till next month. Something like, just that real rough example, but instead of having to kind of just make a guess, you're making an educated decision on data-based, facts.
Okay. How much does flipping a unit cost in general for your areas that you're investing in?
Yeah, it really depends on the property and what we're doing with them. Like one of our properties, we're just real basic, paint, new flooring, some new fixtures. Those are going maybe for 2,800 for a flip. We have another project we're working on where we're not fully gutting the property. We're kind of not doing much to the kitchens and all that, but that is going about $6,000 a flip. So it really just depends. We haven't really done. I mean, we own some retail that we've done in office. We've done some heavier flips on that we've sunk $20,000 into a flip. But you have to buy a project where you hear some people that are buying big apartment complexes and putting $20,000 in per door. I haven't gone through like a heavy lift like that yet. Not to say I won't one day, but
yeah,
don't have the experience to talk through anything like that.
Okay. Yeah, it'll be a lot of fun when you're doing a lot of flips and a lot of work. Mm-hmm. And then timing wise, figuring it all out, scheduling it with everyone, having a crew to do that. It gets fun because you're changing a unit so quickly and hopefully keeping retention up at the same time and moving people to better units. I see it as a way to improve the community. Like you're improving the building, you're improving the community, you're improving the landscape of things. And hopefully at the same time, you're helping your investors make money and making it beautifying the space, right? And putting a name out there, a brand out there, and making this building like whatever name you want to name it and make it really great, right? Make it stand out. That's kind of fun too, because now it's kind of like Monopoly in a sense that, hey, I bought something, it was dilapidated, it wasn't poorly managed, and now you just beautified the whole thing, made it so much more enjoyable for everyone to live there, stay there, and then at the same time turn over units as you go to keep improving the whole building throughout and adding value quickly to scale, right? That becomes fun too, because like, hey, I made this, look at the before and look at the after. So you can transform something so quickly. That's the fun part of it too.
Oh yeah.
So like in the data driven part too, are you guys implementing like RUBs and utility structures in there to help you guys reduce your expenses?
Yeah, one of our properties, we about a year ago probably we started doing like water bill back and different stuff like that. We own, I think now our greater part of our portfolio is triple net leases. So we're doing quite a bit in the industrial space now. Which is real fun to work in. But yeah, no, any ways that you can find value, that's a huge one. If you can start billing back, if you have if there's the opportunity to bill back certain expenses, stuff like that, I mean, it is huge.
Nice. What do you think about like multi-units versus triple net leases?
There's differences for sure. There's the positive and negatives to each one. I do like, multifamily is still like our main thing, and it's great. It's easy to lease units. Industrial is tougher to lease units. You get triple net leases though with long-term tenants, and it's a little bit more stable. A lot of times less BS overall, but So I mean, there's definitely several positive and negatives to each one. For us right now, it's just, and this is a nationwide thing. I mean, multifamily deals are out there. We're still trying our best to find that next 100-unit B class value add apartment building, but so is the rest of the world. It's the deal everyone's after right now, and it's just so competitive. And you're seeing cap rates at such low rates. It's hard to justify some of these returns to investors that we have to hit. So we've been looking quite a bit and doing deals in industrial, where still quality assets that provide great returns, just at a little bit higher of a cap rate where we can make sense for these returns.
Nice. How's the vacancy factor for a industrial versus multi-unit?
That's the thing for sure. I mean, if a unit goes vacant,
Mhm.
there's more that goes into leasing it. It could sit, and that's I mean, right now, I mean, in the markets we're looking at industrial vacancies at about, I think it was 4.1%. I just looked at Q2 numbers overall in these markets. So I mean, it's
That's pretty good.
it's right there with multifamily. It's about the same.
Okay.
So I mean, spaces are leasing. It's just a matter of finding the right tenant. It's not as easy as an apartment's easy to lease. I mean, you can throw it up on Facebook Marketplace and rent it in a few days in most locations. But so that's one of the tough parts for sure, is finding good tenants. That's why most of the time, we're not buying vacant industrial buildings and betting we can lease them up in a year. We're usually buying buildings that have longer term leases, and a lot of times these leases, although guaranteed's a hard word to use, but most of these time these leases are backed by strong tenants that are essentially guaranteed. And if we're looking at our pro forma, and our equity is recaptured, but within 3 or 4 years of this lease term, it's kind of like, okay, I mean, we're recapturing equity is almost guaranteed, and everything there is upside. So if they were to move out, we can kind of protect our downside, building up reserves. So I mean, that's the tough part I found with industrial, is on the underwriting side. I mean, multifamily is somewhat straightforward when it comes to forecasting vacancy. You can usually, unless it's a big turnaround, you can use a blanket 7-8% vacancy or whatever you want to use throughout the whole period if it's stabilized. With industrial, it's tough. I mean, say you're buying, there's only 3 or 4 tenants in this industrial complex, and leasing's up in 5 years. It's just kind of, you can try to do a little bit of research, but it's almost a crapshoot figuring out, is this tenant going to release or not? If they do vacate, how quickly am I going to be able to release this thing up? What vacancy rate should I use for year 5? Stuff like that, where we can get a little bit more educated guesses there, I'd say. But that's why I always just lean towards the route of being very conservative. And if it, I'm gonna forecast it's gonna sit vacant for a year, maybe we fill it up in 2 weeks, and then everything else is just upside from there.
Nice. Yeah, that's the scary part for me. Like, I like triple nets, but at the same time, I don't like the vacancy factor, because if it does, within 3 to 5 years, you're at risk unless you have a really good network of commercial businesses that want to lease in your area, and you built that whole database, and they want it up front. Then it gets easier. Some guys have that. Some guys have a huge database. Go, don't worry, I'll call anyone I need. I'll find the right person that fits this building, right? And that's strong for them, because they know their network. But if you don't have a network, then get scared, because who's going to really want to lease? And do they know you? What's all the setups? And does it make sense for their business? Might not know their structure of leasing, right? So it gets tougher that way. You need to learn both sides now. You need to learn the leasing side, how to work with different corporations, and you got to still maintain the building and do it. And the other part about it is, like, how do you add value? At multi-unit, you can create added value. In a triple net, how do you add the value? You're stabilized.
Yeah, it's a little bit, that's the other thing. One of the, there's a little bit less opportunity. There is value add opportunities, but it's not as, easy to, let's say, explain or execute. It's more so, a lot of time the value added is going to be more straightforward, where it's, maybe we're just increasing rental rates. Maybe they're, price per square foot's lower than what it could be. Or sometimes there's deals that these tenants aren't on triple net leases, although the market demands for that type of deal to have a triple net lease. So you convert them from that to triple net, which can be, could scare them away. Stuff like that. There's not as many, in multifamily, there's probably 100 different ways you can add value, through all these different things in the industrial space and stuff like that. I mean, there's ways to do it, but it's a little bit less, opportunities of ways to target value add deals.
Okay. And going back to the multi-unit space, are you guys using your data and tracking, like, local, like, for example, like the economy, the jobs, the corporations that are moving in and out, the net migration, incomes over the year over year, pre-COVID, post-COVID? Are you guys looking at that as well?
Yeah, we track kind of different markets we're in. I don't use like, I don't have any like crazy tools I use. I mean, I use like dash data, use that quite a bit to try kind of track population trends and income growth and all that. For the most part, we're within the same, 5 or 6, tertiary markets are kind of where we operate in. So we have a good idea, we're in these markets, on the ground. We've yet to kind of branch out into any other states and stuff like that, where, then it becomes double, essential to really understand what's going on because you're not physically there, to see what's going on. But yes, we do kind of look at these different data points.
Nice. Yeah, because also too, like when you're going to different markets, you have to build new teams in every single market too. So it gets challenging too, because you might like a property, but you don't know the exact truth, the data behind it, and the team behind it, and how they're going to perform for that property. And when you're if you're assessing properties across the country, it gets even harder too, because now you're looking at multiple properties, but at the same time, you need to figure out multiple teams to really compare, right? That gets
Absolutely.
that gets a little tricky too. And then which one's better? You don't know for sure, but you have an educated guess, and then you really try to make sure, and it comes back down to the team that's going to perform with you. And also, if you have any knowledge about, okay, hey, big companies, Amazon, Salesforce, Tesla, whoever is moving over there soon, or they already bought a location, we think the area will go up because they're going to bring this many jobs to that area. Then great, you hit next door to it, even better, right?
Oh yeah,
That
that's
gets
that's
fun.
that's the home run.
Yeah, that'd be fun, because you get great locations. You're like, wow, this is gonna stabilize. I'll be fine. We have Tesla next door. We have Amazon next door. They're gonna bring some good jobs over there. So then
Yep.
your rent should theoretically go up.
Mm-hmm.
Okay, nice. And then how about, you guys look for any like natural disaster planning? Look certain locations you don't want to buy. Flooding, tornadoes, thunder, whatever. You guys look at that?
For our market here, it's not really a worry. It's funny. I was just having that conversation with someone, though, because we're talking about maybe trying to, expand like Florida at some point. And those are all factors where you have to definitely understand. But for us up here, it's kind of, up in Wisconsin, we don't really get too many, knock on wood. We do get
Yeah.
tornadoes every once in a while, but it's fairly something you don't really have to worry about. I mean, floodplains and all that stuff you do, but yet to really run into anything like that.
Yeah, it's nice to have a stable area where you don't have to worry so much about all these natural disasters. Like California, you have fires, you have earthquakes. Other places, you have tornadoes, thunderstorms, flooding. So then, I think flooding is one of the different kinds of worse, because if you flood your whole property, that's a lot of work to clean up, right?
Oh yeah. Yep.
I don't even know how people deal with that once that happens. That's really hard to see.
Expensive.
Expensive and hard to see, and
Yeah.
it's crazy. So yeah, those are kind of things I like to look at too, and like just think about, okay, where area are you investing in, why that area, what's going on in that industry, that location, and how is it going to grow? Is the migration growing? Is people moving there from relocating from California to other places? And what's been happening in the last 5 years, right? And then you start looking at the rent changes and seeing that grow. But when you start seeing those little indicators, you can make some smart bets on it and start increasing value and saying, hey, this is a great place to go in. I think next 5 years, here's what's going to happen. It goes up, right? And even for me, like in real estate sales and investing in the Bay Area, I see that. And even back in 2008 to now, I'm like, here's all these things that's going to happen, but no one knows for certain. But it did happen. And great, investors made a lot of money. Now, hey, will you do that again? And will you do that again with us out of area? And
Yep.
we'll see. But those are kind of fun things to analyze and predict. And that's why one of the reasons I also like data a lot is because it really tells you a lot. Historic data, even forecasting is not perfect, but you can really get a good census and hopefully use your best judgment indications to figure out with your team how to invest in different markets, right?
Totally agree. Yep.
Nice. So, about to wrap up, but tell me a little bit more about Smart Asset Capital. Like, what's your main job at Smart Asset Capital for you? What do you do at there?
I'd say at this point, we're all kind of, our roles are all intermingled, and I'm kind of involved in every aspect of it. But the majority of my time goes into finding and analyzing deals, as well as asset management. So those three things. I do raise capital as well, but I'd say those are kind of where I spend most of my time, is finding deals, analyzing them, and then being involved with the asset management. At this point, like I said, I'm pretty much involved with all aspects of it now, and we kind of all just kind of work together on everything. But
Nice.
it's it's been awesome. We've been able to grow around this area and build a network throughout the greater Milwaukee area. And I think there's huge benefit in it is nice to be in multiple markets, but I also think there's a big benefit into having a strong presence in one market and really knowing all the brokers and knowing who all the players are in your area.
Totally makes sense. You can see each building performing, so you know when one building's performing really well, you can start increasing the other ones. If they're all failing, you can kind of sense why the market's going down. You can kind of adjust for it quicker because you see it from multiple buildings. Okay, and then for example, why Milwaukee? Like, even though you're there, but why Milwaukee?
Yeah, it was more so kind of grew up in the area, and that's where kind of started, and just built the relationships here. And then my partner already had a property management company and a huge network around here, and it was just in our backyard type of thing. Which I think if you can get away with starting in your backyard, I know there's some markets, people, if you're in that are really hard to, it could be really expensive, or just numbers don't work in a lot of these markets. If you're in a market that's doable and it works, starting in your backyard is definitely the easiest way to go. I mean, because you can literally go out and meet people. There's something that's said about going in person, meeting someone. Instead of trying to just set up calls and everything from long distance, relationships kind of get lost in my opinion, doing it that way. So I think, if you have to invest out of state, I mean, it's 100% doable. You can build relationships, a million different ways nowadays, but starting in your own backyard, I think was the easiest way to get started.
Yeah, totally makes sense. And even in California, there's other areas. You can always drive an hour, 2 hours away. There's a lot of areas, right? You just got to really focus on which ones you want, what makes sense, and what do you see over there. And I see that too. Some people do that out of area, like a couple hours away, until it works, and you get the comfortability. So that totally makes sense. And then you guys have been focusing primarily on multifamily, or are you guys jumping into more office, retail, industrial, self-storage, retirement homes? What do you see the trend going on right now?
Yeah, multifamily is still our main thing. Just not seeing as much deals that make sense nowadays. But for me, industrial, self-storage, and strip malls are kind of where we're kind of straight away from office right now. Really, industrial is probably the asset class I'm most bullish on right now as well. We just bought a self-storage facility. I mean, that's been going wonderful.
Nice.
And the right strip malls, I personally think, I know a lot of people probably disagree with this, but a strip mall with strong service-based tenants in a suburban location, to me, is a good buy right now. I think service-based tenants are here to stay. I mean, someone that cuts hair, or these different laundromat, stuff like that, where there's they're here to stay and they can't really be replaced by a business that can't be replaced by e-commerce. I'm not going to invest in a tenant that sells clothes right now, because that's stuff like that shifting online. So if I find a strip mall that has strong tenants that are service based, I like that play right now too.
That makes sense. I like that too, because if everything can be easily done online, chances are you'll be going out. Hopefully not, but chances are it'd be easier to take those people's presence, and Amazon and everyone will take over online, and it's hard to compete because they have a great online presence. Yeah, like the service-based strip malls make sense. And everyone needs food, right? Hopefully they want to eat food. They want to go out and support local people and eat food. Great.
Mm-hmm.
That makes more sense than buying clothes. Nowadays you can buy clothes. Maybe one day they measure you all online anyways and just send you the clothes. You try it on and return it. It's so much easier. So then it gets harder for the local people to just say, hey, I want to go in and try your clothes on, and walk around and go browse through hundreds of clothes I don't even want, just to find the one I want.
Yep.
Yeah. So it makes sense. Okay, cool. So now I want to ask one last question too. What do you think? How do we help investors, people who want to become syndicators, really get in the market right now? Like, what should they be doing today to jump in either investing or in building their own syndication?
Say two things: education and networking. Yeah. The first step is definitely the education piece. I mean, you start today you start right now listening to this podcast. I mean, stuff like that, where it's, listening to podcasts. That was huge for me. Books, maybe invest a little money in an online course, stuff like that. I mean, just really learning it and spending time and not getting too far ahead of yourself first. I mean, you have to spend the time to learn it, and then build relationships. I mean, you can do both those simultaneously. It's really just that's really the first step you have to do before you start calling brokers and you start trying to raise money. I mean, you have to develop that base knowledge. So when a broker or investor asks you what cap rate is it, or what's the cash on cash return, you don't sound dumb not being able to answer the question. So you have to first develop that base knowledge and then just take the steps to get up there.
I agree. I think the hardest part is taking the first step, and it's really being out there. If you're an introvert, whatever you are, you really need to go networking, whether it's online Zooms, if you feel comfortable that way, or you want to go in person, going to meetups, especially looking at bigger pockets, looking at listening to podcasts, reading books, watching YouTube videos, Rich Dad Poor Dad, whatever it may be, you got to do it, right? And that's the only way to really execute. And once you'll be ready when you're ready. You'll know it because you started taking the education and value, and you can sense yourself like, okay, I'm ready to connect and meet people, talk and learn more, and actually start doing in the role. Yeah, the first one's always the hardest one, but once you get going, it becomes so much easier after that, right? You get comfortable because now you did it once. All you need is one time to do it, and then from there, and whether you partner, get mentors, coaches, it works, right?
100%.
Okay, cool.
Totally.
So how do people reach out to you?
I can be reached. My email is Brock, BROCK, at smartassetcapital.com. There we go. And then also I have quite a few educational resources on my website. A whole bunch of different things, the asset management stuff I was talking about. I have an ebook on finding and analyzing deals. So the website, if you just type in www.smartassetcapital.com, click the education tab there, and I have a whole bunch of different ebooks and tools there to download. Feel free, you can shoot me, on Instagram as well. Trying to do more there. Instagram is just at Brock Mogensen. Feel free to shoot me a DM there too. I'd love to get in touch.
Cool. Thank you so much, Brock, for being on our show today. And, thank you for providing that value to everyone. Hope you guys enjoyed that. Hopefully you guys take action. It's already June 17th. When are you taking action if you haven't already done so? And if you already done so, great. Keep doing it. Keep pushing through it, because it's always that plateau, the failure, the fear. Just get over it and just start asking questions, start working with the right people, connecting with everyone you can, asking us as well, and hopefully listening to more podcasts and, learning more. But thanks so much for being on our show, Brock. Everyone, check us out on the Truth About Real Estate podcast on Apple and everywhere else, and we'll see you in the next one. Have a great day.